On December 12, 2025, Pakistan's finance ministry announced a groundbreaking agreement with Binance, the world's largest cryptocurrency exchange. This memorandum of understanding aims to explore tokenizing up to $2 billion worth of government assets, a bold leap into blockchain technology. The signing, attended by Finance Minister Muhammad Aurangzeb and Binance CEO Richard Teng, marks a bridge between Pakistan's sovereign finance and the digital asset world. Minister Aurangzeb called it a milestone in Pakistan's reform journey, hinting at a long-term partnership that could reshape how the country manages its wealth. For a nation already ranking as the world's third-largest crypto market by retail activity, this move is both natural and ambitious. The initiative is designed to address economic challenges by converting government assets into digital tokens, injecting liquidity, and enhancing transparency. Tokenization could open Pakistan's markets to global investors like never before. This agreement, though exploratory, positions Pakistan as a potential blueprint for other nations seeking economic revitalization through blockchain. It's not a standalone experiment, but part of a broader digital finance overhaul, with new regulatory bodies and legislation paving the way. Pakistan is signaling its intent not just to join, but to lead the digital financial revolution in the region. So, what is tokenization? Simply put, it's turning rights to an asset, like real estate, bonds, or commodities, into a digital token on a blockchain. This digital certificate of ownership can be traded, transferred, and stored securely, accessible from anywhere in the world. Tokenization allows investors to buy fractions of assets, lowering barriers to entry and making markets more inclusive. These tokens can be traded 24/7 globally, unlike traditional markets with limited hours. Blockchain technology underpins this process, providing a decentralized, tamper-resistant ledger of all transactions. Every token transfer is recorded and verifiable, boosting trust and security. Imagine owning a small piece of a government oil reserve, represented by a token in your digital wallet, and selling it instantly to a buyer overseas. No need for slow, expensive intermediaries, just fast, secure, and transparent transactions. Tokenization makes assets more divisible, liquid, and accessible, transforming how we invest and trade. The Pakistan Binance Agreement targets the tokenization of core government assets, sovereign bonds, treasury bills, and state-owned commodities. By digitizing up to $2 billion of these assets, Pakistan is putting its economic foundations on a global digital stage. Traditionally, government bonds and bills are traded by large institutions, but tokenization breaks them into smaller, accessible units for global investors. An investor in any country could buy a $100 token of a Pakistani treasury bill, vastly expanding the investor base. Tokenizing government-owned commodities, like oil, gas, and metals, means digital tokens could represent claims on real resources. This approach lets Pakistan raise capital against its resources without immediate physical sales, creating new, liquid markets. The strategy modernizes debt management and leverages national wealth more efficiently. It also increases transparency and efficiency, lowering borrowing costs and attracting a wider range of investors. This move shows Pakistan understands blockchain's potential beyond cryptocurrencies, applying it to the heart of its economy. It's a sophisticated step toward a more open, dynamic financial system. Pakistan's tokenization push is driven by clear goals: attracting investment, boosting liquidity, and increasing transparency. By putting government assets on a global blockchain, Pakistan invites digital-savvy investors who might have overlooked its markets. Tokenization makes assets easier to buy and sell, increasing market activity and efficiency. Blockchain's transparency reduces corruption and builds investor trust, as every transaction is publicly verifiable. This openness can improve Pakistan's international reputation and creditworthiness. Embracing blockchain also gives Pakistan direct access to global capital, bypassing slow, costly intermediaries. The result? More competitive financing and a more resilient economy. This strategy is about more than technology. It's about positioning Pakistan as a modern, competitive player on the world stage. The move signals a commitment to good governance and economic innovation. Pakistan is betting on digital finance to fuel its next phase of growth. The MOU with Binance comes alongside a major regulatory milestone. Pakistan's Virtual Assets Regulatory Authority, PVARA, has granted initial clearances to Binance and HTX. These no-objection certificates are the first step in a phased licensing process, ensuring only compliant, secure platforms operate in Pakistan. Binance and HTX can now register with anti-money laundering systems and set up local subsidiaries. This careful approach aligns with global standards and protects the financial system as digital assets are integrated. PVARA's chair emphasizes that only exchanges with strong compliance will progress. The message is clear. Pakistan welcomes innovation, but only within a robust regulatory framework. For Binance and HTX, this is a green light to enter one of the world's most active crypto markets. For Pakistan, it's the start of a regulated, trustworthy digital asset ecosystem. The Binance Agreement is just one part of Pakistan's sweeping digital finance reforms. The government is building a full ecosystem, new institutions, laws, and a clear vision for the future. Key to this is the creation of regulatory bodies like the Pakistan Crypto Council and PVARA, providing structure and clarity for the industry. Pakistan is drafting a comprehensive Virtual Assets Act, set for 2025, to regulate everything from consumer protection to anti-money laundering. This legal clarity aims to attract legitimate businesses and drive out bad actors. The country is also planning a pilot for a central bank digital currency, a digital rupee, to modernize its monetary system. Pakistan's two-pronged strategy, embracing both decentralized and state-backed digital assets, shows a commitment to building a future-proof digital economy. These reforms lay the foundation for a robust, innovative financial sector. Pakistan's moves align it with a global wave of countries integrating digital assets into mainstream finance. By establishing a formal licensing regime and partnering with industry leaders, Pakistan joins the ranks of the UAE, Japan, and the EU in digital asset innovation. These regions have shown that smart regulation, not bans, unlocks innovation while protecting consumers. Pakistan's approach with PVARA and a phased licensing process signals it's a serious player in the digital economy. As global regulation tightens, countries with clear frameworks attract more capital and talent. The partnership with Binance leverages global expertise while ensuring national oversight. This model, industry innovation under state regulation, is becoming the global standard. Pakistan isn't just following trends, it's helping shape the future of digital finance. Pakistan's tokenization initiative holds huge promise, but also faces real challenges. Success could mean billions in new investment, economic stability, and lower borrowing costs for development. But the MOU with Binance is non-binding. The real work, technical, legal, and political, lies ahead. Implementation risks, from tech glitches to regulatory hurdles, could slow progress. Cybersecurity will be critical. Any breach could damage trust and derail the project. Public understanding is another hurdle. Tokenized assets are new and complex for most Pakistanis. Without education and outreach, participation may be limited to sophisticated investors, missing the goal of broad inclusion. Building trust and protecting consumers will be as important as building the technology. The government has set the stage, but meticulous execution is now key. Navigating these pitfalls with care will determine whether Pakistan unlocks the full potential of this bold move. The Pakistan-Binance agreement is more than a financial deal. It's a potential turning point for the nation's economy. By embracing blockchain, Pakistan aims to modernize its markets, attract global capital, and create new opportunities for its people. The benefits could be profound: more investment, greater liquidity, and improved trust in government finances. For ordinary citizens, tokenization could democratize investment and spur job creation. A robust digital finance ecosystem, including a future digital rupee, could make financial services more accessible and efficient. While challenges remain, the collaboration with Binance and comprehensive reforms signal a clear break from the past. If executed well, this leap into asset tokenization could mark the dawn of a new era of economic dynamism and opportunity for Pakistan. The journey is just beginning, but the promise is immense.